when you think about your reputation as a venture capital firm, and when you think about when someone's doing a reference check on you, the companies that didn't make it, or the companies that went through the struggle that you laid yourself on the line for and open up and support it as much as you can, those are going to be the referrals that are going to help get you that next great investment, and also along the way allow you to think about more and more how you can be of service to that next founder and continue to help support their visions and their dreams and help push innovation forward.
No Free Lunch is presented by T. Rowe Price. The information provided on this podcast is for informational purposes only and should not be considered financial or legal advice. Always consult with a qualified financial and or legal professionals before making any legal or financial decisions or investments. I'm Ndamukong Suh, and welcome to No Free Lunch, where we talk to experts and athletes about how the most successful people in sports manage their money and grow their wealth. Danny, what's going on, boss man? What we got going today?
A lot of money talk, a lot of big
As always,
business.
talking about that money. We
have Chris Lyons, the homie and the contributor for our show. And Chris, he's always bringing us, like I said, cool technology or things that we should be hip on around, whether it be crypto or even prediction markets. But I think we haven't really had the conversation with Chris about just venture capital in general. And to your point about ownership, we've had a couple conversations, here and there on our show, like specifically Rick Kleiman with Kevin Durant, 35 Ventures. And we know Serena has Serena Ventures. So there's a lot of A-list talent, that are building up these firms. But I wanted to have a conversation with Chris and talk about his journey and his take on venture capital.
Yeah, I mean, he's one of the best to have that conversation with. Obviously, everything he's built himself with A16Z, but then obviously 35 Ventures and Serena Ventures. I already know that they were original investors in Culture Leadership Fund alongside myself and vice versa. And those folks have been able to learn from Chris and the learnings that he's been able to do in creating his own fund, CLF, alongside A16Z. So, I mean, he is without question the perfect person to have this conversation with.
No, for sure. Yeah. And if our listeners don't know, I think we say it every episode, but just Chris, president of Web3 at Andreessen Horowitz, aka A16Z, and founded the Culture Leadership Fund there. So I'm excited for the conversation. I lived in San Francisco for a year back in my early 20s. So that's like the venture capital unicorn world. So I'm going to geek out a little bit in behind the scenes, but yeah, I'm excited to have this conversation with Chris.
Yeah, man, I think it's going to be dope. And I want Chris to set up some elite, crazy, interesting dinners for us Super Bowl week before we go and hang out there down in SF. So I'm excited about that. And he's got to make sure he sets it up. Maybe we got a no free lunch dinner or something coming up. We'll figure it out. But let's get into it right here on No Free Lunch. My guy, Chris, what's popping, man? How you been?
What's happening, man? Good to see you. Good to see you.
As always, man, we've been talking about a ton of different businesses, whether it is gambling, which is a hot topic right now in that model, and then businesses in and around crypto, SPVs, special purpose vehicles, everything through and through. But I'd be remiss to not have you on the show as a constant contributor and my dog of all things, everything, venture capitalism. Like, how do I not have this conversation with you and learn the venture capital 101 from you to share with the audience? So let's jump into it and have a conversation in and around that.
Yeah, no, it's funny because in to some degree, everything that we've been talking about has some form of venture capital around it, whether the companies we've been investing in, we're talking about crypto, but never actually really broke down the game itself. So, we got to do it.
So let's definitely break it down with a simple definition of what venture capitalism is and what that means and really what that landscape is in this day and age.
Yep. I mean, look, the very simple, easy to understand, terms around venture capital is that it's just simply investing in ideas before they become businesses and then actually getting equity in return. So you're betting on founders early, helping them grow. And, if they win big, you win big as well. So you have public markets, which is when you can invest into the stock markets, when anybody can invest into them. And then you have the private markets, which is more so where a lot of the PE and the venture capital structures really happen. And that's kind of where I spend a lot of my time in terms of really trying to find companies at the earliest stages and, kind of helping them along their trajectory of their career until they ultimately, fingers crossed, end up getting into the big show, which is the publicly traded markets.
I want to go on a little bit of a journey into the space. And if somebody is not as fortunate as I am to have you on speed dial and be able to be like, hey, man, what's the next hottest thing going on? I really want to dive in and have a portion of allocated funds that goes into this space for me in my overall portfolio. And I can't necessarily get to A16Z or the Amazing Cultural Leadership Fund or General Atlantic or all these different great funds. Where do I start? How do I start and get my foot into the door?
Well, I mean, I think it goes two different ways. From a career standpoint, there's a lot of ways to get into venture capital. It's not necessarily even investing. I think one of the ways we've seen a lot of people start to enter the space is just through content and being able to help facilitate networks and introductions and have an early pulse on where the industries are going. You're seeing people create their own Substacks. You're seeing people, have different types of tweets that are going viral for, identifying companies or working with them at an early stage. Also, from a VC perspective, we rely very heavily on our network. So I think it's equally as important, when people say, hey, they want to work in a venture, but, are you sending people early stage investments, and contacting and networking with other VCs in their industry to help show that you can, one, identify early stage founders, and B, really trying to have a sort of a track record of being able to kind of be in the flow when it comes to where these ecosystems and these networks kind of start. So, that's always been, a tip and trick that I've seen that has been really helpful for us, as opposed to just, taking the traditional, let me get an MBA route and try and get an internship, which works for some. But even for me, like I started off, as a founder, I was originally working in the music industry and then had an idea for a startup that got me into an accelerator that flew me across the country. And, 3 months, what I thought would be 3 months into San Francisco ended up being 8.5 years, and starting my career into working at Andreessen. And so, it's been a great journey, but I think that everyone has their own specific ways. And, at the time, VC was just kind of this kind of, secret society to some degree. Where VC firms weren't necessarily being very external with their marketing strategies and approaches. And, I've been grateful to work at a firm that really has revolutionized the industry. And I think that the next, 10 years are going to be even more exciting, not only for our firm, but just for where the future of the industry is going to go.
And you touched on it from this standpoint of education, people getting schooled up, MBAs and things of that nature from a college perspective. But what I'm actually hearing from you more is about the experience. And what are some of those experiences that you would say is really priceless for somebody to, one, get their first opportunity? Is it location, proximity? And like, what are some of those details that you would recommend from an experience perspective to be able to set themselves apart to be somebody special in the VC space?
Yep. I mean, I would say one, definitely. And when proximity was 100%. And then, once COVID hit, we kind of said Silicon Valley got uploaded up into the cloud, where you could kind of be decentralized and work anywhere. But now I think we're definitely starting to see that reverse. And, everyone used to say San Francisco is dead, but now San Francisco is definitely cracking when it comes to, the world of all things AI. I think LA, New York, Boston, if you're in the biotech space, has a very strong ecosystem. Atlanta, and obviously I have to represent South Florida and Miami in terms of where they've also started to really gain a presence in terms of the next generation of companies. And so I think location is extremely important. The other thing, especially when you hear a lot more about what's going on in the AI world, is just being able to have an understanding of knowing what the tools are. I mean, the world is moving so fast. And so if you know how to use the 11 Labs of the world or the next generation Kriyas, or if you can help educate VC firms or people that, whether it's showcasing you actually can use the product, posting that on Twitter or, gaining a following, people then start to even podcasting, like what kind of conversations that we're having right now, being able to showcase that you can do these things right now before you even get the job is actually an even more of a perk when you're thinking about that next career opportunity. Mainly because people want to see if you can do it now. Because if you can do it if you can build your own platform, build your own ecosystem and your own network, that's really one of the most important characteristics and skill sets when it comes to venture.
Yeah, no question, man. I think that's super important, and it's something that I've wanted to be involved in at an early age, not just because it's sexy and is cool, but I believe I'm not only a hard worker, but somebody that can add value and be strategic to these founders who need support. Because I mean, a lot of them start with a small, finite group of people in and around them. And that's why they need these big VC firms that can support them, give them ideas. And while they're working inside the business, they can have people that are around it that are also invested, that are working on the business outside of them, with them. So I think it's super important to be able to have not only VC firms that you work with, but also being able to be an additive investor. And that's one of the things that I loved, and even something that you connected me to, having been a part of Culture Leadership Fund, but Mercury, like the Mercury deal is like insane. Yep. And I love talking to the founder there all the time, just getting updates. But it was a small little company back in the day that nobody knew of.
Exactly.
Put some money in there, and he's done a hell of a job, to say the least, to where he's at right now, and continue to grow even faster.
Absolutely. And I mean, I'd be curious that when I think we helped get you into that around the Series A. And, obviously, Mercury has become one of the breakout companies, for that generation. I think that they're going to continue to keep doing well. But I'm curious, how do you feel like you're, as an investor, we always say, this, how can I be helpful tactics, but like, when it comes to getting into competitive deals, like, they think that, Suh's just can automatically be welcomed into every deal, but you have to also compete and fight into some of these deals because they're so hot. And so, like, how do you think about kind of, your value add as an investor, as now getting more into the venture capital space?
Yeah, value add. I think there's a ton of things, but ultimately it's not so much what I think I can do. It's ultimately what the founder needs for them and their overall blueprint, what's on their whiteboard that they're struggling to get to. And humbly as I can say this, I feel like I'm a quarter degree of separation from anybody in the world.
That's right.
You're like 0.01% away from everybody in the world.
It depends. We'll try though. Together we're unstoppable though.
Yeah, no question. But those are the things. It's like, I want to know what's on that whiteboard. What's in his office or her office is saying, hey, what do you need for me to go and help you with? Is it a person? Is it a thing, or whatever it is? Let me help you and let me be your foot soldier so I can help you from that aspect. And so that's kind of how I look at it in broad brushstrokes. And then let's have thought-provoking conversations. Let's throw other ideas out there. You may be thinking in one direction, I may be thinking in another direction, and we find somewhere in the middle. Oh, this all seamlessly comes together from that perspective. So it really just comes down to spending time with them and building out things ultimately from that perspective for me. And to me, like, you're 100% right, man. Just because you got great name, image, and likeness, and you on a dope podcast, no free lunch, and doing these great things, I still got to find a way to fight to get into some of these deals.
Well, I think that's one of the things that we're starting to see. I mean, we've already seen it, but I think that really where the evolution of venture capital is going from, where you're starting to realize that the best companies in the entire industry, they're not really, they don't necessarily need the money. So you saying that you have the dollars is more of a commodity. And now it's really turning into,
It's a simple concept, bro.
Exactly.
Dumb money or money that adds value.
Yeah.
And what do people want? They can get money from anywhere. They
100%.
want additive value of saying money is a commodity. I can get that anywhere.
Yeah.
I can go get some debt if I'm that great of a company, but I need you have something strategically within you that I can leverage and support, and you can bring to the ecosystem for us to have an unfair advantage. And that's what everybody's looking for, is that unfair advantage.
One of the things that I kind of have always implemented, and I think that, even from the Mercury example to a lot of our relationship over the past 10 years is this idea of shared genius, where as a entrepreneur, you're a genius in terms of what you've been able to accomplish and how you've gotten to this point of creating this idea. But at the same point, you're a genius in terms of how you think about the world and what you've been able to accomplish in your career. And it's two totally different worlds, but like what happens when you bring them both together and then start to really kind of ideate and brainstorm about the business, understand different viewpoints, and actually really start to have that different type of mixture of DNA that kind of connects both worlds together. And I feel like that's sometimes where you see some of the most interesting opportunities kind of really start to open up and develop. And I personally get no bigger joy than kind of putting two amazing people in the same room and then seeing kind of what the best ideas can really kind of come together. And even for me, I feel like it's an art form, but then through that actually can help evolve the business and take it to the next level.
Yeah, no question, man. I think that's huge. Being able to have geniuses in your own rightful space, but you're coming from different lenses to come together ultimately. Let's jump into Venture 101. And what are some of the usual characteristics that you'd be looking for in specific rounds? We talked about Series A in my investment into Mercury from that perspective, but let's talk about the seed funding round and what would you be looking from that standpoint? And really, before the pandemic and really through the pandemic, you see a lot of people throwing money in companies that aren't profitable. And so at what levels and what series should you see profitable companies? And we'll come back to that, but let's talk about the seed funding round. What are some of the usual characteristics and important things people should be looking at the seed round?
Yeah. Well, I mean, seed is kind of like the dream phase. It's like a founder might have a prototype or early traction, but might not necessarily have real revenue. So you're investing in the belief, not necessarily the numbers. You're investing into the team. Oftentimes we notice that the idea ends up changing over time, whether it's the market or whether it's what you thought was a good idea that they ended up having to pivot and kind of move from there. So one of the most important things is really identifying very high quality teams that have core characteristics that can really bring you up into this space. We kind of like to call it the idea maze. And so basically, how has your entire life gotten you into this point where you are really kind of set forward on making this your life's work and developing this company? Those are the type of things that we like to hear when we're looking for a potential investment.
Yeah, no, I love that. And then at what stage is it? Series A, Series B? And I know it's dependent on the company and what their obviously their thesis and overall goals are, but typically on average, what series should they be looking to start trajectorying to profitability from that perspective?
Well, I think, normally when you start getting into growth, I mean, to be honest with you, in today's world, it's actually changing a ton. Because if you think about just I would say in the last era of venture, you had to, have an AWS account. You had to have a whole engineering team. So the teams were much bigger and which required a lot more capital. You're seeing, now with the help of AI and different tools that are starting to become built, companies become profitable, companies getting to market at much earlier stages. And so because of that, now the bar has been raised and you can also, as an investor, can have more shots on goal with that without having to put as much money up as you had to in the past, knowing that companies can actually get to that same size, if not larger. I mean, even if you think about back in the day, some of the biggest companies, whether it was Instagram that got purchased by Facebook. That was like, I think 10 to 12 people. When WhatsApp got purchased, I think it was like, I mean, don't quote me, it could be under 18 to 25 people. Moral of the story is extremely small teams that created massive products. And I think that with what's about to happen with this next round of companies that are coming into market, you're seeing that exact same thing, but at hyperscale. And so that means that the bar, in order to actually, go out and make these investments and really bet that you're the clear category winner in the space, has also been raised too. That also creates more innovation and more companies coming after to hopefully make the internet a much more exciting place.
No question. One thing I think our audience should understand is when you are fortunate enough to be a part of some of these large VC firms, how does a VC firms make money and ultimately return capital and liquidity back to their investors from these investments that they've made throughout the body of the different funds? Yeah.
So I'll try and break it down as easy as possible. So venture firms make money in two ways. One is management fees and two is carry. So basically the management fees, you raise a fund, you have management fees that are associated around it. They pay basically the team, the investors, to operate the funds. Normally it's around like 2% a year. So if you have a $100 million fund, 2% of that a year is actually going towards your operating expenses. The real upside is around the carry. And traditionally on, VC firm structures, that's normally around like 20% of profits after the investors get their money back. So after the limited partners or LPs actually, we have to pay them back first before the actual venture capital firm actually is able to recoup their carry. And then you only make money when a company exits. And so meaning when it's either in getting company exiting is normally in two ways. One is getting acquired, and the second one is when it goes public. And that's when the shares that you've held for a certain number of years end up becoming liquid. So say, for example, if you invested, this is just top of the dome stuff, but if you invested $1 million in a company, at a $10 million valuation, and then it exits at $1 billion, that $1 million could then turn into $100 million. And then that's what we call, power law investing, or like we kind of call it the Babe Ruth strategy, where, companies will swing for the venture capital firms will swing for the fences and, try and invest into what they think is going to be the next big company. And you might, similar to Babe Ruth having the highest number of strikeouts, he also had the highest number of home runs. And so in the VC, what we call power law investing, like one winner can actually ultimately return your entire fund and give you the opportunity to continue to keep raising funds.
So let's talk about that real quick, because you said something key that I think a lot of people don't understand. And I love that you're using Babe Ruth and you're putting into baseball terms.
Look, come on, no free lunch. Come on.
No doubt. So I think something's important, and correct me if I'm wrong, but if a VC firm is batting 300, they are top notch, considered some of the best, AKA they've had 10 investments and they've lost on 7 of those and only won on 3.
Yep.
That is common practices of the success rate for VC firms, for lack of better words. And I think that's where people don't really understand. You're going to have more losses than you have wins, but those wins are typically going to take you through and through and cover those 7 losses and more from that perspective. Exactly. So break that down a little bit better for people.
Yeah, well, I think, look, it's kind of like getting a championship ring after years of practice. Like it doesn't the early investments don't always pay off the right way, but if you pick the right player and you have the right season, then you end up it ends up becoming life-changing. And so it's like, the whole goal in venture capital is to get into the best deals. But obviously, there's three stages of venture. Stage number one is like you have to be able to like actually have the deals come in, and so you have to create the halo effect to actually have entrepreneurs to be like, cool, like either I'm going to send you this deal or we would love to have a conversation. The second part of venture is then, from your team's perspective, to be able to evaluate the company and be like, okay, this is the one that we think is going to be that home run, that one that's going to return the fund, the next Uber, the next, you name it, insert famous big company that, everyone talks about. And you have your internal huddle and you say, okay, this is the one we're going to bet our horse on and that we feel like they're going to change the industry. But, there's a consensus that happens at that second stage where there's a ton of VC firms that have that same idea. And so, which ultimately leads to the third stage, which is my favorite stage, which is the part that you have to actually win the deal. And so that's where the competition comes in. And that's where, you might be able to say, I want to invest, but the founder ultimately has the final say in terms of working with the best venture capital firms. And so that's really where, you have to really think about, okay, like outside of the capital itself, what are we offering? Are we offering the best board members? Are we offering a network? Are we offering strategic introductions? Do we have a go-to-market strategy that can really help put this company up and take it to that next level? How are we going to think about future financings? Because once you get down the venture capital train, it's not necessarily just investing into one round. We talked about the Series A, the B, the C. And so really kind of thinking about just the longevity of the business. How are they going to, and then them as a founder thinking through that they have the ability and they're working with a partner that's going to help get them through those life cycles. And so there's a lot of frameworks and mentalities that come around with it. But, at the end of the day, it's about, really thinking about how you can be of service to the entrepreneur. And I always tell everyone, even though venture capital is a finance industry, to me, I always view it as a service industry. And, I started off my career in high school and in the restaurant space. And, I built a company in the restaurant technology space. And I always believe in a service-based businesses. And I think that how important they are. But I feel like venture is one of the biggest ones because every single day you're waking up thinking about how you can help the companies that you're investing into and what services that you can provide to make their path and help them accomplish their vision and their dreams as easy and as efficiently as possible. Because it's a hard road.
Yeah, for sure. I think that's an amazing takeaway is of you're in a services business and you're making these investments and you look at it like, oh, no, these founders need to serve me and get me these amazing returns, where it's really, no, I'm providing you a service of capital, a service of resources, a service of knowledge and takeaways and things that I've seen throughout that could help you not make the same type of mistakes that other people have made in previous investments that I've had. Exactly. I think that's spot on, man.
Exactly. 100%. And I think once people think about it from that standpoint, because the investing part is obviously extremely important. But I think that, being able to really think about how we can be supportive and how we can help be two steps ahead to open up those doors as the founders continue to go around their journey is the true, not only just labor of love, but that's what unlocks the reputation, because the best companies oftentimes don't even need your support, right?
Yeah.
And so but the companies that do need your support might not be the ones that make it. But when you think about your reputation as a venture capital firm, and when you think about when someone's doing a reference check on you, the companies that didn't make it or the companies that went through the struggle that you laid yourself on the line for and open up and support it as much as you can, those are going to be the referrals that are going to help get you that next great investment, and also along the way allow you to think about more and more how you can be of service to that next founder and continue to help support their visions and their dreams and help push innovation forward.
So Chris, you talked about the art of winning the deal. And I want to go into let's go into the conversation of CLF specifically, and how does CLF take not only its investors that are alongside as LPs, including yourself as a GP from that perspective, and what diversity in opportunities allows CLF to have this edge to win those deals outside of other great VC firms as well?
Yeah. Well, I think that one of the things that, when you take a step back and you think about, there's two stages of it. One, when you think about venture capital, you should look at it not just as an investment vehicle with with actual capital, but as a network. And so whether you're a company that's targeting the sports industry, the music industry, if you're studying the fashion industry, if you're studying the arts industry, you name it, at some point you're going to want to have people outside of traditional Silicon Valley to help actually support, whether it's on an advisory standpoint, whether it's on a strategic activation standpoint, whether it's on, actually validating that this product is actually the real thing. And so you're going to want to have the world's greatest people that are going to be associated with that. Oftentimes from a cultural standpoint. And so, that bends to, okay, well, who are the greatest cultural leaders in that space? And so one of our theses was that if you just think about consumer culture specifically over the past 15 years, the past 15 years just started entering into the technology space. But before that, who were the leaders in sports, music, entertainment, fashion, film? Me coming up and realizing that Black culture was extremely influential and had some of the greatest cultural leaders in that space. Now you apply Black culture and then insert it into technology and consumer culture. And now let's see what happens when we can combine the world's greatest entertainers and connect them with the best entertainment startups. Or you're talking about the companies that are really pushing the future of generative AI music, and let's connect them with the world's greatest songwriters and the world's greatest musicians to see what happens to go from there. And so then you start to see these worlds start to come together. And so from a creative standpoint, but even more so, when we talk about generational wealth and we talk about access to equity versus endorsements, when we think about if the next generation of wealth is happening within the technology industry, I want to, it was extremely important to make sure that more people that looked like us had a seat at that table, and not just the actual physical table, but the cap table as well too. So that way we could actually help, move forward when we're thinking about where, to strategically place your dollars to get into the conversations on the next generation of board companies, and not actually have invest into these things once they've already gone public, where they've already used our social equity. But what if we could actually get that from the very beginning, and kind of what I mentioned to you around the shared genius idea of allowing the culture to really be embedded into the next generation of these businesses from the ground up. And so that was always extremely important as well too. And we've been at it for over 10 years when it comes to just really putting these strategic relationships together. And I think that just with the evolution of where the industry is going within the future of crypto and the future of AI, we're going to see more and more of these collaborations and, co-investment opportunities happen.
I think it's very important to be able to have those pieces in place. And obviously you're cutting edge and a leader in that endeavor.
I appreciate that, man. Well, I need you on my side in order to help make sure to unlock these things, man.
I'm always there, boss man.
Come on.
I'm always there.
Let's do it.
And this has been an amazing conversation. It's always a pleasure, my guy. And appreciate you joining No Free Lunch again.
Yeah, man. Look, this is what it's all about. And, I'm glad we got a chance to break down venture capital. Look, it's literally just the modern day version of back in the next big thing, and before the rest of the world sees it. And so whether you're an athlete, whether you're an artist, whether you're a founder, what we always talk about is the key is ownership, and that's the new status symbol, and that's what we're all about.
No question, man. Architecture of engineering, generational wealth. No doubt.
Let's go.
It's time for the Confidently Curious question, where we ask questions that are one step ahead. Sponsored by T. Rowe Price, where they believe that asking better questions can lead to better outcomes. So my Confidently Curious question of the day is, what are the daily hours of the New York Stock Exchange? A, 9:30 to 4 p.m. Eastern, 8 to 5 Eastern, or 10 to 4 Eastern? That's an interesting question. The answer is A, 9:30 a.m. till 4 p.m. Eastern. The New York Stock Exchange and the NASDAQ are open Monday through Friday and closed for the weekends. That's our Confidently Curious question for the week. Thanks to our sponsor, T. Rowe Price, for modeling the power of better questions. T. Rowe Price proudly sponsors No Free Lunch. The views expressed in this podcast are those of the podcast participants and do not necessarily reflect those of T. Rowe Price. Their sponsorship supports the platform and does not imply endorsement of specific content or perspectives. What a great conversation with Chris. Ultimately, it comes down to the ability to have conversations and learn about what other alternative investments are allowed and can be afforded to you as an individual. And I think VC is something great that I learned early on, and finding great mentors to guide you and teach you these great opportunities that can potentially be out there. And really, as Chris said, understanding that you are an investor into the project, but also that means you should be serving that founder and supporting them in any and every single way. Make sure you like, comment, subscribe to No Free Lunch on Apple, Spotify, or YouTube, or wherever you get your podcasts, or I'm going to come find you.